Good morning, ladies and gentlemen. How are you doing? Hello. I see some replies. I'm assuming you all can hear me. I like that. My name is Zano. I'm just gonna show you. Guys, I have the flu. I started on this weekend, so I'm dying. Let me just open up my camera so you can see me. Yes. So that's me. We'll be taking you through the masterclass for accounting 2 for the first semester for test 1. Yeah, I won't stay too long on the cameras on because I want to project a lot of things, but I just wanted you to notice to see who you're speaking to, as it makes it much more easier. Yeah, I hope everyone is happy and doing well. Yeah, without wasting any time, guys, let's start with our session. All right. So with me, we are going to do a question paper, an assignment question paper out of 100 marks. However, I do have some tips before we can start with the session. Basically tips to use when you're practicing for upcoming test. I have them with me. I can just go through for like 5 minutes, and then I'll let you ask any questions. When I'm projecting, I won't be able to see the screen, so just shout. Just call Zano, and then I will just stop and then attend to the question. So you don't need to wait up until I finish. You can just interrupt me. I won't mind at all because I won't be seeing anything on my side. All right, without wasting any time, guys, I think we should be ready for test 1. I know it's a little bit nerve-wracking, especially for my students. They said it's a long jump from first year to second year. And I think I agree because a lot of second year work is mostly descriptive. There's a lot of theory, which wasn't there much in accounting 1. But that's just the gist of it. There will be a lot of theory in future. Not even in second year, also in your third year as well. So I'm hoping that we can adapt and move along. All right, I'm just trying to project something on my side. Okay, the test one preparations. Okay, let me just share my screen. Share task. Share. Just let me know when you can see. Anyone? Remember, I can't see. Just let me know if you can see. Let's take time and check this out. All right, guys, are you still with me? Any thumbs up? I'm not sure if I'm audible now in this case. Oh, okay, I see the thumbs up. Thank you so much. Thank you so much, Sipiso. All right. All right. So these are the preparation tips that I've prepared for this lesson, also for my students as well. So basically, I don't want to waste any time. I just want to go straight to the point. So what is the approach for test 1? So basically, test 1 will cover learning unit 1, learning unit 2, learning unit 3. So learning unit 1 is capable of being asked a similar question, meaning that you can expect some sort of question 1 only emanating from learning unit 1. However, learning unit 2 and learning unit 3 are likely to be integrated questions, meaning that they can be combined together. In fact, in most questions, learning unit 2 and learning unit 3 are always combined. So you can also expect the same type of approach when it comes to these exams. Right. So let's go to learning unit 1, ephemeris and conceptual framework. So a textbook is the great resource you can use to answer most questions under this learning unit. And I agree with you. I agree with this, guys, because a lot of theory that is being asked in the past papers emanating from learning unit 1 is taken from the exact book. There is no deviation at all. Even with my lecture slides, the only thing I had to amend was just the conceptual framework. Other than that, the rest of the theory, we use the book, right? So you can use the past papers to gauge what is likely to be in your exam, and you can do this by. So because there's a lot of theory in learning unit 1, right? So you want to know what is more relevant and what is not relevant and all stuff. But generally, everything that is included there is quite important. You need to just highlight and be able to have a discussion with any person with regarding to those concepts in learning unit 1. However, to get a more clear idea, what you can do is you can download past papers. Let's say you can start from 2020. And then from there, you can check what is being asked. So let's say if they were asking you that the IFRS monitoring boards, let's say they're asking you to define or specify roles. So I just want you to go to the textbook and highlight that part, right? And then on top of that, that heading, you are going to write the question paper that was being asked. Perhaps you can say 2013 test one. Why? This is so to help you so that when you're reading unit one, you are able to see which could be asked in an exam. So that also minimizes the stress of wanting to know which parts within the learning unit are more important and all of that. So I used to do that a lot when I was an undergraduate student as well. So please take this advice and use it. So your reference to the textbook, okay, we spoke about this one. This helps you identify the most important parts. Okay, we spoke about this one. So when it comes to theory, the one that says define, provide roles, I'm not too much heavy in there because I let the students have their fun. Most of the time, most of the content there is just memorization and you taking notes and making sure that you are able to define all of that. However, the part that I'm going to spend so much time on is the conceptual framework because it's a little bit difficult to answer in an exam, right? So the conceptual framework, let's go. So you need to be able to define or describe any fundamental and enhancing qualitative characteristics. So remember them. Remember the fundamental QCs. They were talking about usefulness. So we have relevance in them, and we also have faithful representation. So basically, the idea of these qualitative characteristics is that each and every set of financial statements that is being published to the public or whoever the case, it should meet all of these QCs, both the fundamental and also the enhancing. So what do you mean by that? So all the information that you record in the financial statement must be useful. That's number one. So basically we're covering the fundamental QCs. It means number one, it must be relevant. It must be relevant to the entity, and we mustn't have any doubts that the information will not be relevant to the entity. Then number two, it must have a faithful representation. So by that, we are trying to tell basic or trying to promote the unbiased and basically being able to provide information so that all users are actually aware of what is happening within the company and not providing some information and keeping some information. So basically transparency at its best, right? And then once that has been fulfilled, you also go to enhancing QCs. I remember on top of my head, I think there are four. I think we have understandability, timeliness, verifiability, and comparability. Yes. So what it means as well is that for every transaction that has been included in the financial statements, it must be understandable. Basically, it must be simple. And then number two, it must be verifiable. So if we are speaking about an expense, for instance, we must be able to have a source documentation for that expense, meaning an invoice. And this invoice must be for the company, which is we must see the name of the company. It must be for the current year, which is timeliness, proving timeliness part. And also it must be, basically, it must be clear to understand. We mustn't be unsure after gaining all of that information or what it was saying. So that's the essence of these QCs. Are you going to be asked them in an exam? The likely chance of them being asked in an exam is very high as well. So it's worth to note down in your textbook. Please highlight and underline. It will be very important. Just to make one last example when it with regards to this fundamental QCs and enhancing QCs. If we are to speak about, for instance, a basic transaction about revenue, let's say we are selling a product to a customer. So you want to know basically if the transaction will meet the QCs, the fundamental and the enhancing. Well, the fundamental, it's quite easy because remember, when you're selling it to a customer, that information is relevant because you need to disclose it under revenue, right? And then normally you usually have a cost as well, or the selling price that you've priced the product in, right? So that means you've achieved relevance. And then faithful representation, it means that including every possible information with regards to this transaction. Did we offer any discounts? Did we basically all those kind of details, any VAT that has been taken into account, because that information now it forms towards faithfully representing not only the actual revenue invoice itself, but also the entirety of the implications that surround the revenue transaction. And then let's move on to enhancing. How would enhancing QCs be applied to this revenue transaction? All right, is it verifiable? Sure, it is verifiable. Why? Because we have the till slips or the receipts that we've used with the customers. So it is verifiable. And we also have, let's say, if we have surveillances, we also have records of the customer coming to the business and taking the goods and paying at the till point, right? So it's verifiable. Timeliness, meaning did it happen in the current year of assessment? The answer is yes, it did happen in the current year of assessment. And then we move on to understandability. Is the invoice itself understandable? Do we see all the information that is applicable? Is it presented in the correct currency? So it should be basically understandable. And then comparability. Are we able to compare such details, let's say from prior year or from other invoices? If the answer is yes, then we've achieved the 2 QCs. So I'm just going to come back to my screen. I just want to see if there's any questions so far. Okay, I don't see any questions. Okay, so I'm going to continue with the rest of the tips. Right. So now we're trying to end maximum marks. Now, let's say we are asked a conceptual framework question. They are saying define an asset or a liability or an income or an expense. So what is the first starting point? So number one, you must know the definitions of an element. Basically, we have 5 elements. Remember those elements, the fancy one, the assets, the liabilities, the income, the expenses, and the equity. Yes. So now, before we dive into them, remember we have the financial statements, or the set of financial statements. So you need to be able to understand which element goes into which financial statements. Because let's retract back. Because if we're talking with a statement of comprehensive income, which is the income statement, then we all know that the elements that are going to be in there are your incomes and expenses. I hope that's clear. Now, when it comes to statement of financial position, which is a balance sheet, we all know that the elements that are going to be in there are going to be your assets, your liabilities, and your equity. Okay. And if we're speaking of a statement of changes in equity, then we know that it's only equity accounts that are going to be available under that statement. And the reason why I'm ending in those trees, because those are likely or surely you are going to be asked at least one of those in this upcoming test one. So it's very much important to understand which one of these elements will belong to which statement, because it makes it easier when we're doing questions and also understanding it overall. Right. So you must know the definitions of elements. Use bullet point form when answering this question by firstly describing the said elements. You will always have to define an asset or a liability, so be sure to know these definitions. All right, this is very important because a lot of people miss out a lot of marks on this one. What happens if you are asked to define an income or an expense? It's very simple, because the definition of an income or expense, they will tell you that an expense on income, there must be a decrease or an increase in asset or liabilities and all of that, which is very nice and simple. However, when you are answering in an exam, eventually you will need to have to define whether you have an asset or a liability. Now let's dive into an example. This means that if you are asked to prove if a transaction is an expense, then you must first prove there is an asset decreasing. I hope you are underlining this part as well. So if you are asked to define an expense, that means first you must prove there will be an asset that is decreasing or a liability that is increasing. Because remember, the very definition of an income or an expense says that an expense exists when an asset is decreasing and when a liability is increasing, as long as those they don't increase because of equity participants. All right. So what is the transaction saying now? They're saying that, for instance, you paid electricity of 1,000 for the month of December. Prove that this transaction will be an expense. All right. So let's see. The journal entry in this case would be debit electricity expense. So we're in December. So we're trying to prove that this transaction will be an expense. So what would be the journal entry? We would debit electricity expense, P&L, meaning that it's going to go to the statement of profit and loss. That's what P&L means. And credit bank, which is SFP, which is statement of financial position. Right. So do you notice how indeed an asset was reduced? Because now bank decreased because of this asset. Remember, we paid this. That means cash was reduced from our records. Now, the first step is to define an asset, basically. So what is an asset? So an asset is a present economic resource controlled by the entity as a result of a past event. Right. So do you see how you haven't yet tried to define what an expense is, but you know by virtue of the definition of an expense, you will have to define an asset first, or a liability, depending on the situation. So in this case, we're defining an asset. So in this case, bank, because it's the one that's going to be reduced by this expense. So what is the present economic resource? In fact, do we have a present economic resource? Yes, we do. There is a right to receive cash and use this cash for whatever purpose the business uses it on. So let's think about bank. If we have a balance in the bank, what is our right in terms of that balance? It means we have a right to use it, right? Is this right controlled by the entity? Oh, definitely yes. Why? Because we entered into a contract, right, with this bank when we opened the account. So it's under our name, so it belongs to the entity. Do we have a past event? Yes, we do have a past event. It's the day when we opened this account. But remember, a past event must be something that happened in the current year. So what happens if our past event, so we had opened this bank account 10 years ago or 20 years ago? Do you notice how that is not in the current year? So do we still have a past event? The answer is very much simple. Yes, we do. Why? Because all those laws and legislative requirements recorded when we entered that contract are still applicable in the current year. Hence, we do have the past event, right? And then you consider the recognition criteria. Is it relevant? And also, is it does it represent a faithful representation? Because remember, for an asset to be recognized, it must meet both the definition and the recognition criteria. So I'm hoping through examples where you had a chance of understanding what the recognition criteria is. So in this case, it does meet the definition of an asset. This asset will then decrease the value of the electricity expense. So it will then decrease by the value. So do you see how you concluded that there is an asset? And then after concluding, you did mention that this asset will then decrease by the value of the electricity expense. And this expense is paid to a normal electricity supplier and not the owners of equity, meaning that we didn't debit dividends or ordinary share capital. No, we only debited a normal expense account. This then meets the definition of an expense, meaning an expense will be recognized for the period to the value of 1,000. I'm just going to come to the screen just to see if there's any hands raised up or any questions printed down. Oh, no. I'm looking at the wrong things now. Okay, I'm not seeing anything. Oh, I'm supposed to be looking here. Okay. Awesome. Let's continue. Now, you probably are wondering, what would the other instance be? Because you said that an expense, it must also decrease an asset. And what are the other alternatives? That it must increase a liability. Let's just quickly do that one where it increases the liability. So if an asset didn't decrease as a result of an expense, therefore a liability will increase as a result of the expense. All right. For instance, we are renting a building and we have used this building for the month of December 2025, but have not yet paid the rental. Right. So we've been staying in this building for December month, right? Yes, for December month, and then we have a rental that is due, but then we have not yet paid it. That means on December, we have a liability that we must raise. So what will be the journal entry? We would then debit rent expense, because remember, this is accrual basis, and then credit rent payable, because in December, we still owe it. This means then your starting point is to prove that this is an expense, is to define a liability. So in this case, we have to define first a liability before we can prove that this is an expense. So notice how important it is to know your journal entries, because once you know your journal entries, it makes it easier then to know what's the starting point. And then you define a liability. A liability is a present obligation of the entity to transfer an economic resource as a result of a past event. I think I heard a tick. I'm just not sure if it's from the group. So let me just check. Can't see the screen being shared. Same. Hello, is there anyone, guys, who's able to see the screen so that we can check if all of you cannot see? Okay. Okay. Okay, I will try to unshare. Can you see me? Can you see now? Okay. Okay, thank you. Please don't be afraid, guys, to just shout. Like, I know I can't see. Please, ne? All right. Let's just continue to this one. So this is the part that I was doing. So you first define a liability, A liability is a present obligation of the entity to transfer an economic resource as a result of a past event, right? Do we have a present obligation? Oh, yes. Why do we have a present obligation? Remember now, we have a duty or a responsibility to pay the landlord the money due for December. Remember, we've used the space in December, so we ought to have a duty to pay back the landlord for the space that we've used. Also, we cannot avoid this payment, meaning that if we were to be bankrupt today and close off our business, we would still be liable to honor the rental agreement. No excuses. That's what it means. And then we will be transferring an economic resource because of this transaction? Oh, yes, we will be required to settle this with cash because remember the terms in the agreement of the rental agreement, you stay in the flat and then you pay. So that's the idea. Is there a past event? Yes, definitely. We have obtained a benefit because remember we've obtained this benefit in December, so that remains a past event. And also signing in the rental agreement also serves part of the what do you call a past event because it's what also enabled us to actually have this liability. So then if the definition and the recognition is met, and then this results in increase in what you call in liabilities, then that means in this case we have an expense. So that's how you would then approach a conceptual framework question to say how do you answer it. Right, I'm just going to come back to the screen again just to see if we have any questions. Okay, I think everybody's happy because I don't see any questions or any hands. All right, let's continue with the last bit of the tips and then we can jump into the exam. Learning Unit 2 and Learning Unit 3. All right, so we're done with Learning Unit 1. So we're just going to go through Learning Unit 2 and 3 and see what can we tip ourselves from. So remember the financial statements you must concern yourself about for test 1 is statement of comprehensive income, the statement of financial position, and the statement of changes in equity. There's a high probability that these will be asked, so don't forget this. The statement of changes in equity, so the statement of comprehensive income or statement of profit and loss and other comprehensive income has two methods of presentations. Don't forget that. The first one is the nature method. That means that all of your expenses, in fact, everything, both this method, the first part of the presentation of the income statement will be the same. What do I mean by that? Both the nature method and the function method will have revenue as the opening. I hope we're happy with that one. And the second item is going to be cost of sales. So depending whether the entity is a periodic, uses the periodic inventory system or a perpetual, cost of sales will be calculated as per normal. So it's either you're going to have a compound cost of sales or you're going to do that nice calculations where you say opening inventory plus purchases, less than your purchases returns, any discounts, all of that, plus directly attributable costs, then less your closing inventory. So that's if they are using a periodic inventory system. Okay, no problemo. Awesome. So that's if they're using the periodic inventory system. So I'm just trying to give you an idea of how these two are going to be different. So cost of sales up until the gross profit, they are both going to be the same. Nothing is different. And then let's follow the line item that follows under that, which will be your other income. So for both the function method and the nature method, you will have other income. So nothing will be different. The only change now will be when you're presenting your expenses. So note, the only change between these two is only under the expenses. With the nature method, all of your expenses are going to be in the face. Basically, your admin costs, your audit fees, your stationery expense, all of these expenses. However, for the function method, only 3 costs are expected to be on the face, namely the distribution costs, administration costs, and other costs. Luckily for us, you're not going to have to wonder as to which expenses belong to which category, as all of them you will be given in an exam to say this one goes where and all of that. So please know those differences. And also, since now we have learning unit 3, that means that we will have to continue down below after profit for the year. You're going to have another heading called other comprehensive income, where you now include the revaluation surplus, which is additional income, because remember it goes to OCI. So that's how learning unit 2 and learning unit 3 are going to be integrated in terms of the income statement. So you will need to have that column under there if you're asked to prepare the income statement. And then we move on to, what do you call this? To the statement of financial position. It's very simple. Just know exactly which items belong into a statement of financial position. I'm not going to dive into much detail. We're just going to see it as we do the example. And then when it comes to learning unit 3, now that's nice stuff, because now we're dealing with IS 16. Cost model should be relatively simple, but revaluation model, on the other hand, is the one that may be a little bit tricky, but it's very nice as well when you understand the ins and outs of it. All right. Oh, and also wanted to speak about the statement of changes in equity. How you will have ordinary share capital, and you are going to have movements in this one, but the movements you can expect are issue of shares and the movement of you selling back those shares, you know. So that will be the movement. Otherwise, other than that, I don't foresee any other movement. And also, if you're giving your shares to your shareholders, so you have your shareholders who are already existing and you're giving them free shares, that's also going to form part of the movement of ordinary share capital. Remember, dividends, they have nothing to do with ordinary share capital. I don't want to see you minusing dividends paid under ordinary share capital. Ordinary share capital stands alone together with any share issues. And then you'll have your retained earnings. Retained earnings is nice stuff. You'll have your retained earnings at the beginning, plus your profit for the year, the one that is on your income statement, then less any dividends. So dividends paid are only paid on retained earnings. Hope you know that. Then we'll have revaluation surplus as well, which will form part of our equity. And then we'll have another account, general reserves as well, if the exam allows. But basically, I don't want you to be alarmed when you see that one as well. Yeah. Just want to see then if there's anything that I didn't cover in terms of this one. Okay. I think we'll cover the rest in terms of the question. I also given you the day, like what to do on the day before the exam, and then on the day of an exam, and then, but I don't think that's important at this point in time. Right. So let me just now fly to the assignment question, and then but before we do it, I'm just going to come back to the screen just to check if we're all together. I think we're still not together. Do we have any questions before we start the question, guys? Can I get a thumbs up then if you are fine? Okay, I see a thumbs up. I see a thumbs up. Okay, thank you so much. I appreciate it. All right. So let's dive into the question. Okay, I think I still guys can see. So question number 1. You have been appointed to assist the accountant of Freedom Pty Limited in preparing the financial statements for the year ended 31st December. So you're in an exam, you are reading. So what do you do during the reading time? This is what you'll be doing. You'll be highlighting the most important things and then writing just a few words just to indicate what's up. So year end, basically you can write that one. Why? Because we don't want to mess up with our timeline. We want to know that we're going to prepare for the 1st December 2024, meaning that our 1st of January 2024 is going to be the beginning of the year. All right. So remember, what are we expecting in this question? We're expecting learning unit 1, learning unit 2, learning unit 3. All right. Ordinary share capital or sum. So we can highlight this one. What can we say? It's going to go to the statement of financial position or statement of changes in equity. And then what else can we say? Check for any movements. Perfect. And then we'll continue to read. And then the retain ends at the beginning of the year. Perfect. We highlight, what do we say? We say it's going to appear in the statement of financial position or statement of changes in equity. And then we will need profits for the year. Profit for the year. Just sort of for the spelling, guys. I'm hoping that in an exam you won't be this thingy, statement of financial position, statement of changes in equity. Basically we're just looking for profit for the year, and dividends paid to get a balance at year end, and possible transfers, because they're going to say that you transferred, let's say, some money from retained accounts to general reserves. So obviously it will decrease the value of your retained earnings. Then inventory at the beginning of the year, okay, this information is going to go to the statement of financial position. Why are we given it? Maybe to calculate cost of sales. We don't know yet. We're still reading. So this is basically to allow us to see what the question is all about. Landed cost, nice stuff. We know it doesn't. Okay, let me just check. I think I have a question or something. Are we going to get the slides? I'm just not sure the slides. I mean, maybe from your lecturer side, maybe they can offer you the slides. Yeah. Which year's past paper is this? This is an assignment. This is an assignment from my side that I took from last year, 2024. Yeah, it's an assignment, basically out of 100 marks, same content. Yeah, but for distance learning students. Land, it doesn't get depreciated. It doesn't get depreciated. Okay. And then buildings at cost, right? Then buildings accumulate depreciation carry at the beginning of the year. Okay. So that means here CV at the beginning of year will be cost minus this amount. Okay. And then you move on. And then quickly highlight. So you're highlighting basically during the reading time because you want to make sure you cover yourselves before you can be asked a question. And where is it going to go? SFP, obviously, to get a CV, which is carrying value at the beginning. We then say cost less this guy, here. Okay. And then motor vehicles at cost, accumulated depreciation, same stuff as above. Hi, I hear someone speaking. Can you send, or definitely I will send you the assignment, guys, so that you have a chance to see, and also my solution as well, so that you are able to be comfortable. I hope that's okay. Okay. And then motor vehicles accumulated depreciation. Okay. I actually want to send you this one that's already highlighted. So I'm hoping you won't mind if I send it after, so after I've had this highlight, so that you can also get to remember what you spoke about. Motor vehicles, same as above, Okay.
Sir, you've muted yourself.
Oh, sorry. Thank you so much for that. All right. So it says here, no interest has been paid or accrued to on the loan for the current year. It means we must raise it and record a liability, meaning that we're going to debit finance costs and credit accrued interest, which is a liability. It's not a financial position. And how we're going to do that, let's go up again. So this is so we're going to do that by going, yes, to see this loan here, 9 million. So we're going to say 9 million multiplied by 9%. And then we're going to use that amount for this one, meaning we're going to debit finance cost by that amount, credit accrued interest by that amount, meaning that it's going to go to our liabilities and also our expenses. So our income statement is going to be affected together with our statement of financial positions. Sorry, just give me a moment. Okay, I'm back. Right, and the balance outstanding has not changed. Okay, awesome. That means is it 9 million? 9M times 9%. And then now we'll have statement of changes in equity. So statement of changes in comprehensive income, which is income statement. We're going to have finance costs in there. Add this amount, add. And SFP in current liabilities, add. Okay. Awesome. And then no preference dividend has been paid for, accrued for. Then we must do the same as above. Do the same as above. We debit your, what are we debiting? We're debiting our preference, basically finance cost, and then credit accrued preference shares. That's a liability as well. So how are we going to calculate it? We are going to say that 9 million, 9M times, is it 5% for them, for this side? I think it's 5%, 5%. And then you use that amount. Let's just confirm before we conclude. Yeah, 5%. There it is, 5% in there. Okay. And then let's scroll down. A utility bill of 540 relating to December was received and paid in January. Okay, this means this amount in December 2024 remains a liability as at this date. So liability must be raised. Perfect. And then we move on quickly. Provision for credit losses is maintained a percentage of, okay, very nice and simple. So that means that we are going to take trade receivables times by 8%, which will be balance for credit allowances, 8% of credit on allowances at year end. They gave us a beginning balance. Obviously, I'm assuming your 10 minutes is over during the reading time, but then we're still continuing. Closing inventory has been valued at 9 million. All right, I think we know exactly why we're given that for cost of sales calculation. Perfect. Then they say here, an independent valuer determined the fair value of the building at the beginning was 15,750. The revaluation surplus, okay. So that means we have a revaluation surplus, right? Then let's see. That will be realized through use. Okay, that means now take the revaluation surplus you just calculate it, then divide by remaining useful life. This is what you are going to minus out of your revaluation surplus in statement of changes in equity to RE. Perfect. Nice stuff, nice stuff. And then let's see, depreciation is calculated as follows. Okay. I don't think I'm even going to highlight this one because you all know what to do. Motor depreciation on motor vehicles calculated on the number of units production method. Motor vehicles are expected to travel 450,000 kilometers over their useful life. Kilometers traveled during the year amounted to 37. Okay, so that's the units of production method, this one. Right. So these are nice stuff and small stuff. Vehicles with a cost of 1.2 and accumulated of were sold, all right, for 480. 1.2 minus 720 will give us 480 sold. No profit and no loss was made here. Okay. And then new land was purchased on for 3.6 million, right? Which 1.8 was received immediately. Okay, we should be happy with this one. So it's actual value. Okay. Then and 1.8 received. Okay. Meaning we need to present value this future value of 1.8 million so that we can see how much is this 1.8 M currently. Right, currently. So that means we will need IY, the number of years. So in 2 years' time, we already have that. Okay, let's punch this in. So they say there it is. Okay, so we will use, so we'll say FV equals to 1.8. IY equals to 14%. N equals to 2. PMT equals to 0. Then you compute your PV. Perfect. And then now the PV that you calculate here, you will add this to 1.8 million, the one that is already being paid, received immediately. And then that should give you then your current value of the land. So it won't be 3.6. Perfect. Taxation accrual was estimated. Okay, that's going to sit in our statement of comprehensive income.
No questions in the chat.
Okay, thank you for that. Just want to see. Do we replace expense accounts with finance cost, or is that for specific expenses also? Do we no longer have accrued expenses, income, prepaid expenses, etc. as accounts? We do. We do. Because remember, the reason why we debited finance costs and credited accrued, which is accrued thingy expenses, which is a liability, is because at that time they were not paid and we also owed them at year end. Hence, we debited the finance cost and so remember how finance costs are always going to be reflected after our normal expenses. Remember, we're going to have our normal expenses in our income statement, which is in this case, we're going to have our 3, which is under the function. So we're going to have the distribution, the administration, and other expenses. Then after that, we're going to have now profit after expenses, after operating expenses. Then after that line, we're going to have another line called finance costs. So the finance cost now will include, so I'm assuming there's something in the balance sheet for finance costs, but then now we will include the new general interest for loan and preference shares for finance cost. And then they say, if the question doesn't state which revaluations method to use, like some questions in the textbook, must do elimination method, depreciation, proportional method, gross carrying amount, and the given useful lives. All right. So there are only two types of method under the cost model, IS 16. We have the cost model and the revaluation model, right? In both these methods, you can use any form of depreciation, whether you are using a straight line, whether you're using a diminishing balance, or whether you're using a unit of production. So it doesn't matter which method you're using, they will all have this kind of depreciation thing calculations. In an exam, they will always state which method you're using, whether you are using the straight line or diminishing or productions. And also they will tell you which method, whether you're using the cost model or the revaluation model. I hope that helps. And let's see. Please go through 7. For land, does it never get depreciated? It doesn't has a carrying value. Okay, yes. So with land, it will never get depreciated because land doesn't get depreciated. A carrying value will be its cost or its revalued amount in this case. Sorry, and then they say, sorry, and then if the question doesn't state, okay, not all expenses. Okay, some are located. Yes, okay, yes, I like this. Yes, okay. Thank you so much for this, guys. I like the engagement. Thank you. All right, so what are we saying here? Okay, statement of changes in equity under income tax expense. Awesome. Okay, the company issued bonus shares. Oh, nice stuff. You see, this is what we're talking about. Now that means our ordinary share capital will increase. And our RE will reduce by the same amount on the statement of changes in equity. Perfect. And then he says an ordinary dividend was declared at year end. Perfect. That means if it's declared, it's going to form part of our liabilities. SFP, liability, and also now statement of changes in equity under retained earnings. So you will add this 750 plus with the ones that are paid. So remember we had dividends paid in here. Let's go and confirm. Yes, you see these ordinary dividends, they were paid. So that means you will add the 750 plus 750 to get the total number of dividends paid. A transfer was made from retained earnings. I like this question, very nice and simple. So that means on statement of changes in equity, we are going to say we're going to reduce our RE by 1,5 M and then add this 1,5 M under general reserves, which is also part of statement of changes in equity. Okay. And then let's see the company prepared statement. Oh, we already knew, right? With this one. We already knew. Right. And then what are they asking us now? They're asking here, the managing director has asked you why the disclosure of PPE and equipment is so onerous. Basically, they say that the definition is long. Let me just show you what they mean by this. So that the disclosure is long. I'm trying to show you what they mean by this. Yes. So do you see how disclosures like the very first disclosure of IAS 16, it's a lot. That's what they mean, because there's truly a lot of things to consider. This is the first slide. This is the second slide. Like there's a lot of things to consider. So basically in this question, they're asking, why are there so many things to consider when we're disclosing PPE? And the answer is always very simple, guys. The answer is that, remember, IAS 16 is produced in order to actually comply with IFRS. So remember the qualitative characteristics we've spoken about, the fundamental and the enhancing? Yes. So basically the reason why it's long is because we want to make sure that it has fundamental uses, meaning that it is relevant. It also has faithful representation. And then number two, we're also doing so because we want to make sure that it meets the enhancing, meaning that it is verifiable, understandable, and it is within timeliness and also comparable. So we are going to use those QCs in order to ask this question. So basically, we're gonna answer them along those lines. But that's a theory one for you. I'm just trying to see. Yes. So that's a theory question for you that you can consider out of 18 marks. But I'm gonna share the suggested solution with you guys on the thingy, on the meeting. So don't worry about that one. But it's just a way of trying to basically be with you in like in an exam kind of setting, as in what are you looking for and how can you formulate your answers. All right. So they say question 1.2, prepare all the journal entries relating to the additional information in point 6 to point 9 above. To point 6 and point 9 above. All right. Point 6 and 9 above. Remember, point 6 is the one that talks about evaluation. So let's go there. They're talking about building at the beginning of the year. Right. So do you see big buildings at the beginning of the year? We have a cost of 16 million, 200,000, all right. And then minus, you see the depreciation, the accumulated depreciation here, minus 405123. That gives us with them carrying value of 12 million. But now, do you see what they're saying here? They say now, at the beginning, the same date where we have a carrying value of 12 million, we actually now have a fair value of 15 million. That means now our building must increase from this 12 million of carrying amount to this revaluation of 15. So we're gonna just do a simple subtraction, and then we're gonna find that the actual revaluation is 3.6. So revaluation is equal to 3. Yes. So that means now on this date, which is at the beginning of the year, we are going to say debit building, because now it's increasing. It was valued at 12 million. Now it must increase by 3.6 and all of that. And then credit our new guy called revaluation surplus. Right. Now this revaluation surplus is going to go through OCI or statement of changes in equity or statement of financial position. All right. Same amount as well, 3.6. Right. That's the journal entry we're going to process here. And then obviously in December, what's going to happen is that we are going to process a depreciation. So they say depreciation on the building is calculated on a straight line basis. This depreciation is allocated to administrative expenses. Okay. So that means we must calculate depreciation. Calculate based on 15M, the fair value. Then multiply by 5%. Then add this 5% to admin expenses. Right. And then. Yes, once you're done, remember they said there through use. All right. So what do you mean by that? Over the remaining useful life. Okay. That means we are going to say debit revaluation surplus and credit RE. How do we do this? By taking the 3.6 million of the revaluation surplus divided by remaining useful life. Perfect. The remaining useful life. Perfect, perfect, perfect. Right, that's a December year end. Then depreciation is calculated on the reducing balance. The depreciation is allocated to cost of sales. Nice. That means in this case, the depreciation will be part of cost of sales. That means your cost of sales will have opening balance of inventory plus purchases, then plus depreciation, then less closing. Sorry. Then closing. Then you get your cost of sales, yes. And then depreciation on motor vehicles calculated using the units, right? And this depreciation is allocated to distribution costs. Okay, there's nothing too difficult on that one. The kilometers traveled during the amounted to occur. So you just simply take the CV equals to multiply by 37,500 divided by 150,123 to get the current year depreciation. To get the current year depreciation. And where do we add it? We add it on yes, distribution costs, cost to distribution costs. Perfect, 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 perfect. Distribution costs. Okay. Okay. And then obviously we debit and credit accordingly. Motor vehicles with a cost of 1.2 and depreciation were sold. All right. So how are we going to do this? Because now we no longer have motor vehicles. So what are we going to do? We are going to credit motor vehicles. Motor vehicles by 480. And then we are going to debit bank by 480. In the memo, I think what they did was to debit. They said debit. So I'm going to put or. They said debit. I think they said debit bank. Yes, correctly. But credit accumulated depreciation of. Sorry, and debit, not and debit as well, and debit accumulated depreciation of 720 and credited land, so then credited vehicles and credited vehicles of 1.2. So whichever way that you wrote, you will still get all the marks because the idea is that you still balance the same thing. Your balance sheet will still look the same. Nothing will be different. And then journal number 9, new land was purchased. Okay, I already, so we're going to debit land, but we're not going to debit with 3.6. We're going to debit with this amount plus the PV of this. So we're going to debit land, and then we're going to credit bank with 1.8 because we received it immediately. And then we're going to credit, what do you call? We're going to credit the payables. Yes, by the present value. So there will be two transactions in here. Let me just write them down so that you don't forget. New land was purchased, so debit land because it's increasing. Debit land, so it's going to be 1.8 plus EPV of the other of 1.8 again. And then credit bank because we received 1.8 cash, and also credit the other 1.8. I mean, sorry, because we paid by cash, and then credit the other credit trade payables, yes, by the present value figure. Right, and then okay, that seems to be it. And then prepare the property, plant, and equipment note. Okay, that's perfect and standard. So since we have all our values, it should be easier to then substitute in our notes because we have the revaluation, we have the depreciation, we have the balance at the beginning of the year and the balance at the end. So it's perfect. You won't be needing to calculate anything in here. prepare the statement of profit and loss. Again, you come back to this highlights in here is to say what goes on, what should be in the income statement. So you start, of course, with your revenue. There is your revenue. Then you calculate your cost of sales. We've been speaking about cost of sales as to how are they calculated. And then you continue with the rest of your income statement. And then I think last but not least, they asked for a statement of changes in equity, which is very nice and fair. Yes, so I'm trying to come here and see if, do we have any questions so far? Or are you happy, guys? Yes, when the class is being recorded. Okay. Do you think you would need the obviously you would need the assignment and then the suggested solution as well? I'm also happy to facilitate any questions that emanate from the assignment itself. Let's say if you have any questions and all of that, we can set up time either via Teams or either via my email. Let me just send my email as well so that you guys can also, if I haven't sent anything, where is it? I forgot. What is it? What is it? No. Z. Yes. Okay. Let's copy this one. Copy this. So please, if I happen not to have sent the things to you, just take this email and then you can just say, please, I attended the thingy. Can you just forward me the thingy that we have? Do I have any other memo? Do I have any other memos for the past papers? I do, and so are other lecturers, but then most of the, remember, we don't share the solution as per the institution. However, I usually share after the student has done a question and then they submit and I mark and then I give them this the suggested solution. So you're also more than welcome to do so. Let's say if you have a test one that you wrote, you can just send it to me, your attempt, so I can see and gauge what your understanding is. Then we can take it from there. Awesome. Don't forget my email, guys. Other than that, I wish you all the best. And I'm not sure if you will also need the tips, but then use my email to let me know. They can just say, can you also just send the tips as well? I found them very useful, and also my students found them very useful. I hope you can also find them useful. Oh, okay. Please, yes, that's correct. We will attempt, and then I will correct the work. I will also provide the comprehensive feedback as to what to look out for and all of that. Sure, I will send the tips. Just make sure you remind me when you send me the email, guys, because I may not have all the information about you. So just take my email and then we can take it from there. No, thank you, guys. It's been amazing. Thank you. Do we have a template for our answer booklets? Unlike first year, we don't this year. Basically, it's each on its own. Unlike last year. So we just need to rely on our brains in terms of the templates. So yeah, everything is becoming more descriptive these days. So we just need to stick to the book. Yeah. Yes, guys, if there's no question, then the session is adjourned. Thank you so much.